Good morning, everyone, and good Friday. Happy to be here today for our Trading a Smaller Account webcast. Oh, and I goofed on something. I have to go and fix it now, darn. I usually check that, and I didn't check it twice. All right, here we go. We are ready to start. Now, Barb is in the Market Drive event down in Miami today. So if any of you were planning to go to one of those, Miami's full and going, but another one might be an opportunity for you to head out to. You'll love it if you go. Now, I am on X, and I hope you're following me on X. My handle is Connie Hill CS. Now, Scott, who is here in our chat today helping us out, he is Scott Thompson CS, and will post educational content throughout the trading day. Now, I have a question for you, which we talked a little bit about last week. I was here last Monday. We talked about identifying stocks in stronger sectors. And kind of the follow-up question to that is, are you taking advantage of noticing moves because of news that might break throughout the day or the previous day or at night? Last night we had some major news in that Israel decided to send some missiles over to Iran. And because of that, we're seeing some potential opportunities in the market. We're going to take a look at some of those as we get into our new trades. Now, let's go through our disclosures, and I'll lay out our agenda here for today. Options carry a high level of risk and are not suitable for all investors. You'd have to qualify for option trading privileges. What we're going to talk about today is intended for information and education only. It shouldn't be considered recommendation. We will be using the Paper Money software application. It's what you download to your computer. It's the most robust version of Thinkorswim. And it's great for practicing, especially strategies and just kind of getting used to the software in general. Investing involves risk, including the loss of principal. Past performance is no guarantee of future results. Now, typically in this class, what's going on in the market, we are going to kind of reverse these two items here today. We are going to look at some existing trades that we placed on last Monday. I want to give you an update, show you how those have performed. And then we're going to look at some new opportunities, including maybe some things that are popping because of the developments of that missile launching in the Middle East. All right. In this account, we deal with a $20,000 Paper Money account. Now, to some of you that might be big, to some of you that might be small, but that's the basis of this class. So we don't put more than $5,000 into any position. Try not, or actually, no, we're not going to say try not. Don't risk more than $400 to $500 per trade. We're trying to keep that risk low so that if we have a string of bad trades that don't work out, we're not wiping out our account. We're just using and risking a small portion of that account. We focus on intermediate to short-term time frames, and we will focus on bullish and bearish strategies. Now, more recently, the market's been more bullish, and so, yeah, we have definitely been concentrating on some potential long stocks, long call, short puts, buy writing of a covered call, typically with a stock that maybe is a little bit lower priced so that it can be affordable for this account. And we'll do both short and long verticals in here. And we're going to be looking at 3 different strategies today as we look at some of those opportunities. Now, when conditions are a little bit more bearish, we're going to focus on them as well. Typically, we'd look at long puts, long put verticals, and short call verticals for those bearish type of opportunities. And there are times when the market is a little bit more neutral, when we might explore a calendar or an iron condor type strategy. Now, if you're not familiar with the option strategies, man, we've got a killer class for you, getting started with options. Cameron May teaches that class, and I believe it's on Tuesday or Wednesday. Can't remember for sure. I'll show you a resource and we'll pick that out here in a little bit. But if you're not familiar with those strategies, we teach classes on those strategies that we focus on in here. I teach the one that is on Thursdays, earlier, or it's about noon Eastern time on the short verticals. And right before that, so that's going to be at 11 a.m. Eastern time on Thursdays, Cameron May teaches the long verticals and long diagonals. Now, those are a couple of strategies, maybe diagonals we don't use so much in this class, but definitely the long verticals we certainly do. All right, let's head on over to my Thinkorswim because we're going to check out what the market is doing. Now, markets are off their lows from where they were earlier here today. SPX is down about 0.44%. They're kind of clawing their ways back off the lows, but certainly not positive quite yet. But what's the overall trend of the S&P? Would say that 10-day exponential, that blue line, is definitely headed up. So the short-term trend is bullish. This red 30-day moving average, it's a simple, it is also bullish. So we can say, okay, the short-term trend and the intermediate trend are bullish. I've got a couple of additional things on my screen here that you may or may not be familiar with. This first one is what we call a MACD histogram, and it's an abbreviation. It stands for Moving Average Convergence Divergence, and essentially it's three moving averages working together and showing us what the momentum is of the market or an individual stock that we might be looking at. When this indicator is above what we call a zero line, it kind of is this invisible line that runs across here. When it's on the top side, that's more bullish momentum. When it's on the downside, like right here, that's more bearish momentum. But when we see it rolling up and we see these bright red bars go to kind of that darker cherry red, that's letting us see, oh, the momentum is starting to swing a little bit. And we had one day a little earlier in the week when it crossed the zero line, turned a little bit green, but now it's just kind of down here, kind of near that zero line that's kind of indicating that momentum isn't super strong one direction or the other right now on the SPX. Now, I know you guys use this, the ATR in this class, the average true range. One thing we might notice here is it's just been getting lower and lower, meaning the candles are smaller and smaller, meaning the day movements are just not that big right now compared to maybe how they were back in April and March and so forth. Okay, let's look at the NASDAQ because it's good to take a look at what the major markets are doing, right? So the NDX, very similar. It looks like it's down 0.48%, 0.47%, something like that, okay? But similar type thing, moving averages are heading up. And you know, last week, and even longer than that maybe, it was stuck in a sideways pattern. The S&P was as well, just kind of trading in a real short range, which is why we have that really small ATR. But it started to trend a little bit more strongly. So it's nice to be able to identify that. What's happened with volatility? Do you think it's going to be up today? Do you think maybe volatility, as we look at the VIX, is going to be a little bit down today due to those overnight events? Okay, because that certainly is something we want to pay attention to. Let's pull up the VIX. And I'm going to move this maybe to just say 3 months as we kind of zoom in here. Yeah, volatility is up a little bit. Why? Well, bombing of countries is something that can create some instability, right? It's in an area of the Middle East where, you know, oil fields happen to be a large supply of the oil that our whole entire economy, not just the US economy, but the global economy is looking at. So if the VIX is up here today about 5%, not too surprising. Looks like it's up to here to about 19. Yesterday, it was down in the 8. Let's see what it was yesterday. Let's see where it closed. Closed yesterday at 1802. So it'd been down around 18, kind of creeping down a little bit. So having a little bit of a pop here because of these overnight activities. All right. Let's do this. Danny says, you know, from California, it's been a long time. You have some friends that said the same, loved living in that area. Okay, we're talking about California. We are not going to worry about that so much in our chat. Okay, that's the lay of the lay of the land. Now, there could be some short-term bearish opportunities because of maybe a pop in the VIX, and so that's certainly a possibility. Things we're going to look at here today involve maybe things that are becoming a little bit more bullish because the dollar's been stronger. Recently, some commodities have popped up. We're not going to trade futures here at all, but I do want you to see what the crude oil futures contract has done today, okay? Futures are not something we trade in this class, although we do teach futures. Ben Watson teaches a class on futures. I believe it's on Tuesday mornings right at the market open. In any case, the crude oil ran up. It's been falling a little bit today, but it's still up over 5%. So that could mean opportunities for us maybe are in maybe some oil and energy stocks. That also, let's look at gold futures. That contract is /GC. And what we're going to notice is it has had a nice little run the last 3 days or so, and including today. Now, it may be running up to some resistance. Who knows if it's going to pop through it or if it's just going to roll over here, but it's something worth keeping our mind on. Now, one stock related to gold that we're going to look at first of all is Barrick Gold. Barrick Gold's a big miner of stocks, and typically it is a stock that, yes, does well when gold is doing well or other mineral type commodities because they mine more than just gold. All right, so technically on the chart, what's going on with it? Well, it looks like it had a nice little breakout. We don't know if it's going to close there today, but it looks like it's breaking out of this 21-ish area. It's got at least average volume to this point in the day, which is nice. We'd like to see that extra activity of volume if we're seeing a breakout on the screen. So some traders might use that as a bullish entry signal. Now, this is a pretty low price stock, 21 bucks, okay? And its ATR, it looks like maybe it's creeping just a little bit the last 3 days or so, maybe making a little bit of a move where the candles might be getting a little bit larger and a little bit larger, which means the range that it's trading in is a little bit larger. Now, if we come over here to the trade tab on Barrick, it's already traded 15 million shares today, okay, of just the stock itself. Now, I have open here several option chains that we might consider looking at. It's got a couple of weeklies. These just expired today. But what we're going to look at here is we're going to take the idea that maybe this strength in gold might last a little bit of time as opposed to just being a 1 or 2 day wonder. Okay. So as we come out to the trade tab, you know, if we were maybe putting together a vertical, we might consider these July contracts. Some might even consider these weeklies, but it's kind of getting into that shorter time frame for spreads. Many times traders like to trade between 20 to maybe 40, maybe up to 50 days worth of time. All right. Sometimes we don't get perfect layouts for that. In our situation, if we were looking at a vertical, we might consider these July options. And as I come here, you can see this is my open interest column. We've got lots of activity out here in our open interest. That gives us an idea that it's really liquid, and we love seeing that. We're going to come out here to the September options. And what we're going to look at is maybe identifying something that might be going on longer than just a one little bit of a move, but maybe it's going to extend throughout the summer depending on what happens, right? If this continues to escalate, just kind of depending on what happens, it could be something that we might be able to take advantage of if it really is moving. Price of gold. Okay. Isaiah says, well, why don't we do a covered call since it's a low cost stock? You certainly could, Isaiah. That certainly could be an appropriate strategy. And as we talk about things, it's not so much that, gee, this one strategy is the only strategy we could consider. It might be, you know, based on your portfolio, yeah, if you want to put a stock position in there and sell a call against it to bring down that net debit, absolutely, this could be timing for that as well. All right. What we're going to do is we're going to come out to these September options, and let's see where things are right now. It's 21.46. And so I was looking here at maybe doing something in the money. So looking at this 21 strike price, it has a 60 delta, which means we have a little bit of intrinsic value with it as well. It's a little bit of a delta that's not out of the money. Okay. Technically, I guess technically it is our at the money because it is closest to the strike or the current price of the stock by a few pennies there. Okay, but we're going to use this one. It's trading for $1.90 here, and we could lose the whole thing. If this trade doesn't work out, yeah, we could use the whole thing, lose the whole thing, but we're going to put a stop loss on this, all right? And we can do 2 contracts. Okay, we don't want, sometimes people position size to the max theoretical loss, which in this case is 190 per contract. That puts us just under $400. but not enough to do 3 contracts, because if we lost all of it, that would be over $500. Okay, so we're going to do a couple contracts here, and we're also going to put in a stop loss. Sometimes what traders might do is if the price of this option gets so that it's down, say 50% or more, sometimes traders are like, okay, this is not working out for me. Let me get out of the trade. You don't have to use that rule, okay? But some traders like that. You might be a 40% person or a 30% person. 30% is getting tighter, okay? And we know option prices, man, they really vacillate a lot. So we want to give it some wiggle room. We don't want to like cinch it down too tight. So let's do a first trigger sequential. I hope you knew that was the next thing we were going to do, putting in a stock measure. We'll just go ahead here, create an opposite order, and we're going to put in a price here of 0.95, 95 cents. That would be about 50% of the price of that option. But we've got to change this to a stop, right? Because we're saying, hey, if the price of the option gets that low, trigger market order, get us out. We don't know exactly what the price would be in that circumstance. We just know, hey, it's time to be out. And we'll make that a good till cancel. And the idea here is we're expecting to get filled on this right now. The bid-ask spread, look how tight that is, you guys. 188 by 190, 2 pennies. Oh, we love to see something like that as a trader. We love seeing that narrow bid-ask spread. You know, there's already, out in September, there's already 7,700 contracts on that strike price. So we're out here with lots of other contracts that are being exchanged. We love to have that filling. All right, let's go ahead. We're going to put this, hit confirm and send. And I do have a bucket here for our class, trading a smaller account. And I'm going to go ahead and send that in. All right, we're going to track it. Now, you know, I told you something and I didn't do it. I told you we would look at our old trades first, and I got all excited about what happened overnight. Went to our first trade. So let's just go back up, look at our existing trades. I'll get back to the agenda I was supposed to follow here, okay? We have three trades in here. We had AEM, AU, and something that we got out of earlier today. It's not, let's see here, if I collapse this, it's not showing up right at this moment. So I'll just have to tell you. Look at this, AEM, we're up about 53%, okay? It's something that we did a short put vertical. We brought in a credit of about 60 cents, which is a decent credit, right? It's a $1 or a $2 wide spread. So our risk on this was what? Basically a $1.50 or a $1.41, right? A $1.41 is our max theoretical loss, and we brought in 59. Now we're wanting that value to drop, so we can lock in those what are at this point just unrealized losses because we haven't closed the trade up. But we're in the window that we can't dilly-dally much longer, right? Many traders like to close out spreads and option trades in a window that's maybe 5 to 10 days before the option expires. We're sitting at 7, okay? So on Monday, it's going to be at its 5 days. Now, let's just take a quick look at the chart here. AEM. And let's kind of see what we're dealing with. We got in here it was a week ago or 2 weeks ago on this coming Monday. So we got in this nice little breakout of this flag consolidation. It ran up. It's pulled back a little bit. It's running up again. So it's doing what we want. It's staying above our short strike price of 120 here. So it's doing what we want it to do. Could this mining stock also benefit from what might be going on with, you know, the airstrike, missile strike, right? If it's kind of pushing some commodities up. Yeah, today it's up a couple percent. So yeah, it might benefit from it. So what we're going to do on this one, we're going to let it work over the weekend. We're going to try to collect some time decay on the weekend, and we're going to hope to get out on Monday, okay, because we're in that window. Now, there might be some people that are like, well, it should stay above 120. That shouldn't be a problem. However, it could turn out to be a problem, right? We don't know what the future is. And so we get at a point now, if we hold on to this trade, we are now risking to capture our partial gain here. It's at about 50%, right? It's close to that, but it's a little bit lower than that. But then we start risking more than what we really have to gain. Okay, so that's going to be our game plan for Monday. Going to watch that, see if we can eke a little bit more out of it, but determine, hey, we don't want to risk going into options expiration time and not doing anything and thinking we're safe. Because can things change? Yeah, they can change overnight. And you don't have to have it happen to you a time or two before you go, I got burned because I was holding on, thinking that the stock wouldn't go down. And I know people who have been in a situation where they were pretty much at a max gain, a max theoretical gain, and some news came out on a stock and boom, they got hit with a max loss without time to really recover. Okay, so that only has to burn you once or twice and you start thinking about taking this seriously. All right. Let's take a look at here AU. Now, this is another gold mining stock, AngloGold, say that properly. Now, we had here a short put vertical. We sold the 46, and we received a credit of $1.29 on a $4 wide spread. Right now it's down to about 75 cents. Okay, so it is shrinking, but we've got lots of time on this one. This one has 35 days still to go. So we have plenty of time to be patient with it. Now I'm going to come over here to our filled orders, and I'm going to show you on our filled orders here, the one that we got out of. This is one we put in on Monday. We got filled today at $1.26. Let's see what was going on. We had 9 contracts there. Okay. So NEM, another mining stock, not specific to gold. All right. We caught it as it was kind of breaking out of this diagonal resistance here. Breaking out, ran a little bit, pulled back, didn't really break very low. But the last couple of days, definitely shooting up. And today, let's see, maybe I labeled that incorrectly. Let's see here. Okay, they were calls. They were definitely calls. All right, here. So on this one, it was a long call vertical. We were looking for it to get beyond 56. And what's nice is actually today's the first day it's really gone beyond there since this little pullback. So it was nice that it locked in our gains. It also was a July option, but it moved enough to put us in a position to say, all right, we're going to take the chunk of it. We're going to move on. We're going to kind of lock in those gains, move on to different trades. So hopefully that makes sense to you. We had some nice results and good results going on from those trades we did last Monday. All right. Now we took a look at B, the gold mining stock. What other kind of stocks do you suppose might be performing well today? What other kind of stocks? I'm going to collapse our calculator. I'm going to pull up a watch list here that I just kind of have, I don't want to say sitting around, but for use, okay, of oil and energy stocks. Okay, so there's a lot of them that are really up decent today. Not all of them. Here are some that are not up, all right? But I went going through the watch list and seeing, gee, what opportunities might there be of stocks that are having a benefit from the idea that maybe the price of oil might be going up. Okay, we looked a lot of that, or we looked earlier at that crude oil chart. I'm going to show you a couple here. I'm going to show you APA, Apache. Apache kind of looks like maybe, some might consider that a breakout here. I go to a 6-month chart. Or some might consider it just going up to this level of resistance. I might be more inclined to think of it that way, right? That it's running in the resistance area. Let's see if it breaks through or not. The other one, and there are a few in here, you could go down and take a look at. We're going to look at Halliburton here. All right, with Halliburton, oil and energy stock, this week, it's up about 8.6%, and for the month, it's up about 8.39%. So it's had a pullback during this period of time when oil's been low prices in oil, and then just had a nice, what we call basing pattern, which is a healthy thing for a stock to go through where it trades in a really consolidated range. And then what do we see going on today? If I put my mouse here, maybe draw in some resistance right now, we might look at it about $22 or so. Looks like maybe it's benefiting from this. So again, another breakout entry that we could take a look at for our purposes here. Now, again, we're going to look at something, but it doesn't mean this is the only trade that somebody could do, right? You might be comfortable with two strategies, okay? If you're comfortable with those two strategies, you might decide to just focus on those two strategies, and that is fine. Build some consistency, get comfortable with how they work, and just kind of master it. You don't have to master everything. Now, if we come over here to the trade tab on Halliburton, it's traded over 10 million shares today. So lots of trading activity. And on this one, we are going to use the July options. It's not an expensive stock either. Okay, could you, if you wanted to, buy a single option here? We could in this account if we wanted to. If we were looking for just maybe a short little move. In this case, we're going to go with the scenario. We're going to do a long vertical with this. Okay, the idea with long verticals is that you buy an option, you sell another one. Typically, it's going to be out of the money, and you reduce your net debit. It also puts you in a position to maybe have a decent size gain. It's not going to be unlimited, right? Unlimited is what we did with our first trade on Barrick, where we just bought the long call. We're going to look at it for a longer period of time. Somebody could do that here with these options here. We are going to do, we're going to say buy a vertical with those calls. And what do we need Halliburton to do? We need it to go beyond our short leg, which is going to be this 23. Okay, so we want the stock to move that direction. Well, right now, it's at 22.73. It's got just a few more cents to go to get beyond that 23. And that's where we'd love for it to expire or go further than so we can lock in our gains maybe a little bit early. Okay, so we are willing to risk here 55 cents to make what? To make 1 minus 55 cents or 45 cents. Okay, that's what we're going to look at. How many contracts could we do here if our total is going to be 55? Okay, let's take 500 that we're willing to risk. Okay, so 500, we're going to divide that by $55. We can do 9 contracts here. Okay. Now you might be in a position where your account, your paper money account is different and you size it differently according to whatever your max risk is. In this class with our rules, we can do 9 here, so we are going to do it. Now, what if we get a chunk of it? What if we get a chunk of that 45 cents? Would we be happy to exit the trade early? What if oil kind of makes a steep move, starts to run up? Yeah, we're going to be happy to get out early. All right. Now we're going with the July options here. They're kind of in a sweet spot of that 20 to 40 days of time. You could consider doing the 28s, but they just didn't have as much open interest as the ones going out just 1 week further. Okay, so that's why we're using the July options. We love liquidity. And I was going to point out here, the bid-ask spread on both of these strikes is delicious, right? 5 cents here 4 cents here. We love seeing those tight spreads. All right. So would you personally be content to get a chunk of the 45, now 46? Okay. We're going to put in here 46 cents as our max theoretical gain. What if we can get 70% of it? Would you be satisfied, you yourself, be satisfied if we could get 70% of that max gain? Well, if so, let's go see what that would be. If we went for 70% of it, then we would be looking at 32 cents here. So we're going to take our 32 cents, we're going to add it to currently our 55 cents. And that says, okay, let's go buy it back. And that spread gets up to 87. That's when we're going to take our money and run if it gets to that point. Now, in a spread trade, many times traders don't like to put in a stop loss. If you wanted to, you certainly could. You want to know when you need to get out. We're going to go back and look at the chart for that. But we're going to put in an order here as a first trigger sequential. We'll go ahead. We're going to create an opposite order. This will leave it a limit, but we're going to make it good till canceled. We don't know if or when that might happen. And we're going to say, hey, if the spread is worth 0.87, out we go. We're going to be happy campers with that 70%, and we're going to go on our merry way. Now, when should we get out? Okay, we put in a price there. That didn't stay. What happened to that? 0.87. I think what happened is this price changed. I'm going to move it back. I'm going to move it back where it was. It was down at 55 cents. Let's see if we can't get filled at that. So I'm going to lock that price in. Okay, let's look at the chart here on Halliburton. Now, if this really serves as an area to break out, that resistance hold, what should it be for the stock going forward? Well, it should act as support, shouldn't it? Right? This does not always happen, but sometimes we see stocks kind of break out. Sometimes they come back and test what was old resistance and maybe bounce up off of it. And if it does something like that, then we're like, okay, good. Looks like the stock wants to use that as support. Sometimes stocks will break out and they'll keep going. All right. So we're in a situation here where Halliburton hasn't run very far, because if it was, we might not want to chase it. We might say, let's look for the retest and then maybe get in on a bounce. Okay. But if it retests it and it bounces up, or maybe it comes down a little bit lower, maybe it comes down and maybe tests that low of yesterday. Okay. Then we're just going to give it the wiggle room to let it do that, with the idea that we've got 35 days for that stock to do what? Get above 23. Quite honestly, that's not that big of a move that it needs to make. Okay. Let's see what RF is saying here. RF, I hope I'm saying your name properly. To get the max gain on a long-term vertical, you would have to wait until expiration when the option loses all time value. A general rule of thumb is to take 50 to 70%. You bet that can be a range that some traders use. If they get a chunk of it, yeah, then they're going to be happy to move on. Some people might wait till maybe the spread loses 50% if they want to get out in that case. For us, for this trade, we're going to use the technicals. Okay, we're going to pay attention to see if support acts like it should. This old resistance does that, or if it doesn't. But if it just pulls back a little bit through here, we're not going to get overly worried about it because it's in a vertical. That gives us a little bit of buffer for that. All right. Up next. So that's Halliburton. That's oil. We've done Barrick Gold, which is gold. And these aren't the only ones that could benefit. They're just kind of the most obvious ones right now, okay, due to the overnight news. We're going to look at another stock here that really has been having a nice run, okay? If you haven't heard of this stock before, I'm really sorry. You need to see about this stock, right? Because it is a stock that's been making some big moves. And as we look at it here, what kind of an entry signal can you see potentially on this stock here today? Okay, what do your eyes see? Okay, My eyes are seeing it came down and bounced off the 30. That MACD started to roll up, but today what's happening? This is more of a short-term resistance. And you can see if I put my mouse there, the crosshair comes across the top of where that flagpole was as well. Okay, so yeah, it's looking like some short-term resistance around 135. We'll see what the volume does today. Sometimes if it's a breakout type scenario, some people want to see if it really closes with extra volume, but this is a stock that really does a lot of trading, and it's hard to get a ton of extra volume on a stock that does some pretty decent trading. Okay, so on this particular one, yeah, some art saying, yeah, I see a hold type entry. This, I would say this maybe didn't pull back really that much. So it might be considered for some people a bounce off the 10-day exponential moving average or a break through that very, I'm going to call it very short-term resistance. Okay, about 135, and the support is down here about 125, so maybe about a $10 difference between the two. Now, as we come over to the trade tab here, and we look, did I not send our Halliburton in? I did not send it in. Let's send this puppy in. Let's go to our trading a smaller account. We're going to track that trade as well. Okay, good. We got filled at that lower debit. Let's see what it filled us at. It filled us at, okay, it took our 55 cents. Good, we didn't have to settle for that 60 cents. All right, so come back to the trade tab here. Palantir. Today is traded over 55 million shares. Okay, so it's a tech stock that definitely has a lot of trading activity. It's not an energy stock, so I'm going to collapse that. But it is certainly one that has, we can tell by the chart, has been moving up really nicely. If I were to back up here and say, okay, 6 months ago, looks like its low was about 63, and maybe 6 months ago was at about 75. So it hasn't quite doubled in price, but it's definitely a stock that makes some movement. And as we look here, implied volatility is on a little bit of the higher side, isn't it? So the options here are going to be a little bit more expensive compared to possibly stocks not having as much volatility, but a stock that really moves a lot, yeah, we should expect that volatility. Let's go here. On Palantir, because there's a lot of implied volatility, we're going to come down to these July options. We're going to do a different type of trade. So far, we've done a long call. Then we did a long call vertical. We're going to do a different trade here. And it's not the only trade that somebody could do, okay? But it has strike prices that kind of work out. We're in our $20 to $40 to $50 range as far as the option expiration time. And we're going to come out and look at a short put vertical. We're going to look at selling a 30-something or maybe a low 40-something or a high 20-something delta. Right now, we're going to sell this one. It's 31. It's a $10 wide spread. Oh, juicy, delicious. Lots of open interest here. Okay, again, I get excited about that open interest. You should get excited too. And let's just see what kind of a return it gets us. Oops, let me click on the correct strike price. We're going to say sell vertical. That's going to come up, and I'm going to lock it in. Okay, it might wiggle around a little bit. We want to work with some numbers here. So our max theoretical gain is going to be about $1.50, $1.52. Okay. Second step in this process is to say, is that a good enough return? For our probability of this option, let's see, expiring out of the money. Let's come down here a little bit. This is my column that says probability of expiring out of the money. That's the probability that this trade could go our way. It's about 62%. So traders many times like to see that at least be 60% or a high 50-something percent. So it's in that range. Let's see on this return here. Let's use our calculator. So our max theoretical gain is 152. Our max theoretical loss is going to be 5 minus 1.52. That's going to give us 348. Okay. Why would we be willing to risk 152 or not risk 152, risk 348 more than what our potential gain could be, 152. Why would somebody do that? We really didn't do that in some of our other trades, right? Somebody might be willing to do that because it's a higher probability trade. Okay, so they've identified something that maybe has a bullish entry signal, right? In this case, we are looking maybe at a little bit of a breakout over resistance or a support bounce off that 10-day. Either one of those might qualify it. Well, same thing here. Let's put in an order to get out if we get a chunk of it. Okay, so we're going to do a first trigger sequential. The chunk of 152 is going to be what? Let's go 152 times, let's go with 70%. If we get 70% of that, that means only 30% is left. Let's not wait to pick around the little pennies and nickels. Let's lock in this case, a decent sized gain. Okay, so we're going to multiply that by 0.3. That says we should buy it back at about 45 cents. So let's do it. If we are risking 348 in this trade, that is, we can only do one contract. If we do two contracts, it puts us at too much risk. So we can only do one contract in this situation. So we're going to create an opposite order. We're going to put it in here for the one contract to buy out. If the price gets to 45 cents as a limit order, we're going to make it a good till canceled. We want to buy it, lock in those gains, move on. If that were to happen next week, oh, we'd be tickled pink about it, right? We'd go, sweet. We got our max close to, a chunk of our max gain, and we're not having to wait around 35 days to really lock in that profit. Okay, that one we're going to send on here as well. And we're going to put it in our trading a smaller account. Let's go ahead. Let me see what kind of questions we have here. Ricebird says, I've come to be able to tolerate some high IV, some high volatility. It's not something that is comfortable initially for a new trader, right? Sometimes it's a little scary. Whoa. Some people might be attracted to it. Like, oh, volatility, I'd love to see the stock move, right? And so some people, they might be more comfortable with it than others. But certainly as you get a little bit more seasoned, like you're saying, Ricebird, yeah, you could get a little bit more comfortable, okay? Do you guys know where you can follow up on Barb's classes that she does, trading a smaller account? I hope you're subscribers. If you're not, you're one of the few that aren't yet, okay? You can click on that icon in the bottom right. That's a subscribe blue YouTube looking icon. And you do that once and you subscribe to our Trader Talks channel. We give you some ideas of maybe what's coming up next. Next is going to be advanced charting techniques, and our own Scott Thompson that's helping us out in the chat. He's going to be teaching that class. He used to teach it years ago and loved it. So I'm expecting an exciting class there today. You might want to take advantage of. And then you kind of see the lineup for the rest of the day here. You can also go to the playlist and find something you're trying to get binge watch. Okay, maybe you have withdrawal over the weekend and you're like, oh, I want to go catch up on a couple things. Okay, here's our playlist of all the different stocks. And trading a smaller account is down here a little bit, I believe. Right here is Barb's little face, trading a smaller account. Classes on Fridays today and as well as on Mondays at 12 Eastern time. She'll be back, or somebody will be back. I'm not sure if it's going to be Barb or not that particular day. Okay, but you can go back, catch up on those episodes. Now, I didn't see a survey out there. Thank you, Spot, for posting that playlist out there, so I didn't have to. If there was a survey, which I don't think there was, you're off the hook for that. But if you thought this was helpful and useful to you today, we always appreciate it when you give us a thumbs up, when you hit the like button. That this is a session that is valuable and useful. So just kind of to see our schedule here, you can come over here to the posts. And suppose you don't have our schedule memorized, okay? Some of you probably know some of the schedule, but you might not know everything. Here in YouTube, you can see it at a glance. You can see who teaches typically on that day, and then you see what times it corresponds to. So that's why tomorrow or next Monday, This class will be taught again at 12 p.m. Eastern time. I think I said 10. That's actually Utah time, so it's 12 o'clock p.m. Eastern time. All right, vary to your own time frame. All right. What would you do if you were not familiar with some of these strategies? I'd go hit the Getting Started with Options class. Getting Started with Options with Cameron is on, let's see, where did he go? That's the Managing an Options Portfolio. And is that on a Friday? I can't remember. Scott might have to save me here and tell me where it is because I know he's got all of these memorized. Okay, and you can learn about each of those strategies. If was a little bit too much for you today, I apologize. But go ahead and find that playlist for Getting Started with Options. Get comfortable with these strategies. If you want to paper trade some of these, we're going to have some follow-up conversations. So then you can be following along, know what kind of questions you might want answered if you're struggling. So appreciate you being here today. Again, we're going to take a 15-minute break. Scott Thompson is going to be back here right at the top of the hour. So we'll see you back then. Have a great weekend, everyone. We'll follow up on these trades at another time.